Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So bears making a statement today, and what's going to get my attention as a technical trader way more than any trade war headlines with China and Trump, it's oil breaking $60. That's the most significant event for me today. The market weakness, certainly seeing that as a factor as well. There were definitely lots of factors out there, but the bottom line is we have now broken our short-term range. So we had the low, the high, the higher low, the lower high, gap down open bear break today. Not surprised we held the 280 level, and the reason for that being the hourly RSI was in the teens. So pretty extended as we approached that level. There was buying pressure at the end of the day. It was significant, but it was also the kind of buying pressure where it's happening in the last hour of trading. And the question then is, is this just shorts covering, or is this an actual meaningful bounce? As far as I'm concerned, on the hourly time frame, excluding extended hours, we can just see anything on the hourly time frame is pretty much going to be a lower high on the hourly bounce. The volume is notable for the bulls. We can't disregard that. But for the bulls to make a statement here, holding 280, we need an hourly higher low and higher high to change that trend and to stay in the daily range. It would be a save by the bulls if that could be pulled off. With how much we dumped on oil, which, we broke $60 and then just flushed another 4% or so, the bulls are pretty happy that SPY is still holding 280 at this point. The most important levels are 280 and then the weekly higher low of 277.64. Keeping in mind that even if we lose 280, that does not mean we've lost the uptrend yet. It's just the higher low the bulls are hoping to form at 280. At this point, the bears now have favor. So as I said in the video yesterday, if $60 breaks on oil, it shifts the odds of what is most likely to happen. And in my opinion, it shifts it to favor the bears a little bit. So checking in on IWM, it had the bear break as well. So we look at the weekly time frame for IWM. We have not established a weekly support at this point. 148.41 is a very clear support level, and that level did hold. If that breaks, it's going to be notable, and we'll have a monthly equilibrium on IWM to be watching with the all-time high, low of the December dump, lower high has been set, and now looking for the higher low. So we have oil in a monthly equilibrium. We'll look at that in just a moment. QQQ, bear break as well, significant follow through, a lot of weakness out there. Apple taking it on the chin as far as the impacts of this trade war go. So low, high the bounce, higher low, lower high, bear break, and we broke multiple levels. So looking at it on the weekly time frame for Apple, we're still in an uptrend. We can't lose sight of that. Anything above 176.60 is a higher low. That's a support level we're approaching, but the monthly time frame is potentially going to see some consolidation. It's not an equilibrium because we did break to a higher high on QQQ, but it's all about the weekly uptrends at this point. XLF. So XLF on the daily time frame, we did not break that resistance. 27.21 was the must break level for the bulls. We broke down and took out some support levels. So the weekly time frame still pulling back. And again, here we still have a weekly uptrend and a lot of space to work with. Anything above 25.08 is going to be a weekly higher low. And the bulls have to change the daily trend to give the indication the weekly higher low has been set. And the bulls have been unable to do that, just barely failing 2 days ago, but failing nonetheless, and still in weekly consolidation mode. XBI bulls did hold support. So 80.17 support still holding. 80.71 was a support. Both of those levels held. And we have an ever-tightening equilibrium on XBI to be watching with 83.37 key resistance. If it breaks bearish, we have a monthly equilibrium to be looking at, which is already underway. And if it were to break bullish, then we would zoom to the weekly chart and see if the bulls are able to break the double top up in the upper 87s. But tight range on XBI could be a good play for LABU or LABD, the leveraged ETF, depending on which direction we do get a break, and we might not break until Tuesday. Reminder, there is no trading on Monday in the US. There is trading in Canada. XLV, holding on for the bulls. This is the saving grace at this point as far as everything not falling apart. So we've got our equilibrium we're looking at. If we can't break 90.85, we're going to look for a higher low to form, and it already looks like we will need to consolidate before that level breaks, as this range is going to look to tighten, again using the 2-day time frame to condense it and keep it simple. And anything above 86.83 will be a higher low, so it certainly doesn't look like we're going to lose support in the near-term future. But how this pattern breaks will be important, just like the $60 oil level was really important to me. How XLV, the number 2 holding in SPY, breaks is going to be very important to me as well. Bull spike in the volatility index, taking out resistance. We did see an upper wick of profit taking with that bounce at the end of the day in these markets, but the bulls are trying to form their weekly higher low, because anything on the weekly above $11 is a higher low, so we can anticipate that we will likely form a higher low coming off of this most recent spike. So if the bulls can change the daily trend, the weekly higher low will be established. We've broken resistance, that's a start, but we need a daily higher low and higher high to confirm that weekly higher low has been established. And if SPY breaks 280, I would expect a decent little spike in VIX. So here's oil falling apart, and I traded oil bullish again. It's just I really like oversold bounces, and I've traded it twice bullish yesterday, twice bullish today, and I've gone 4 for 4 on those trades. So I don't know why oversold bounces are my thing, but it's definitely one of my edges as a trader, and I stick with what works. The downside to that is newer traders, it's very hard to trade against the trend like that, and it certainly takes years of experience, so certainly don't suggest people who are newer to trading try and follow that strategy. But the bottom line is we broke $60, and again, we were hourly oversold when that level broke, and look at how much follow-through we got. From that break where the hourly RSI is oversold, we dropped down 4.2 more percent, and the bounce that's taking place at this point is still very weak. The hourly RSI is cooling off on a very weak bounce. The 4-hour looks like a bear flag, and we may see further downside. The bottom line is we are now clearly in a monthly equilibrium with our all-time, well, it's not our all-time high, it's our high, low of the pullback, lower high is 66.58, and we're looking for an oil higher low to form in the mid to lower $50 range sometime this summer, and how oil breaks this monthly tightening range sometime Q4 2019 or Q1 2020. That's just, speculating for, it's an educated guess on when these tightening patterns would break, but that's going to be a very notable event. Same thing for gold. Gold is in a multiple year monthly equilibrium. That's going to break sometime in the next 12 months. I'm going to be watching both of these spaces for these commodities to tighten up on the monthly and then give clear breaks of these patterns. Question is, and the impact of what it's going to have on the S&P 500, are we going to pull back to 49 or are we going to pull back to 56? Because those are two very different scenarios as far as how much impact it would have, how much negative impact it would have on the S&P 500. And again, just, the correlation is certainly there as far as the past 8 months between the market, SPY, and oil. The difference is oil did not bounce as strong as SPY, which headed to a higher high. And the other difference is we can just, measure how much we have pulled back from the high at this point on oil. And we pulled back 13.75%. And for SPY, the amount of the pullback at this point is down around 4 or 5%. So bulls holding on much better, but certainly some downward impact. Natural gas lost the daily uptrend. The question now is, are we going to form a daily lower high and lower low? And the weekly time frame would get further pullback, obviously, if that did happen. So it's a bearish reversal candlestick on the weekly, just giving us a lower high. The bulls are going to have to see a more meaningful bounce than this to be meaningful. And the 4-hour time frame, anything under 2614 is just a lower high, and we're just watching for a daily lower high to be set compared to 2688. So that's where we stand overall. And the question is, can the bulls battle and hold 280 support? And the bulls, what I'm talking about when I'm talking about the correlation with oil and SPY, it can be favorable in a sense where if we don't pull back as much with oil and SPY holds up and holds 280, maybe when oil gets its oversold bounce and gets a bit of follow through, that could help the SPY bulls continue to defend 280. So the fact that we didn't break on this massive dump today is a little bit of a takeaway from the bulls. Obviously on a very bearish day, all the major sectors were weak and heading down. So pretty much bulls need to hold 280 or the bears are going to be, have an extra spike of fresh vigor in their downtrend, daily downtrend. Weekly uptrend, daily downtrend. So time frames for your trades is certainly important. I appreciate you watching. I'm about to say that again because I'm cutting the clip. So I appreciate you watching. Doing the US video now. Gonna end with some praying mantis babies. Praying mantises are great for the garden. They eat all the pests, and they eat all different sizes of pests throughout their life cycle. So I released hundreds of them into the garden, and I saw them everywhere for the first week or so. And they're not good hunters when they start out young, that's for sure. I saw a couple try some strikes at some aphids and ants. Didn't go well. But we'll see if I see them in a month or two when they're bigger. And another really beneficial pest, or another bug, is wasps. Almost all wasps are beneficial to have in your garden. And people don't like wasps, and they think they don't do anything. There are wasps that specifically eat what's the spider with the hourglass? Black widows. There are wasps that eat black widows. There are wasps that eat tons of pests in your garden. So if you have a garden, wasps are welcomed. So that's all I got. Do good things. We'll see you tomorrow. I'm going on vacation to the beach. Videos will probably be sparse over the weekend, but I'll do what I can.